Hello everyone. Day before yesterday, US Fed President spoke very hawkishly, which we discussed in detail in the last pre-market video. As a consequence of that, most of the stock market all around the world fell yesterday, except some very few smaller markets. We know all that enough in detail. So in this video, I don't want to concentrate there. Rather than I like to highlight other things. First, in the last 3 days, Nifty lost 450 points and Bank Nifty lost 1600 points. Before yesterday, both Nifty and Bank Nifty lost more or less same percentage. But yesterday, Nifty lost just 0.8%, but Bank Nifty lost near 1.5%, almost double the times downside. Why? If we see the day's price movement, till 12 pm, Bank Nifty was similar to Nifty, but after 12, there was over 1% additional sudden drop. Here, yesterday was not even expiry day for Bank Nifty, it's just expiry day only for Nifty. So why this negativity in the Bank Nifty? To answer that, yesterday around 12 pm, Jefferies released the huge report on all Indian banks. They said most of the Indian banks are likely to have additional marginal pressure in the next 2-3 quarters, and particularly they highlighted that ICICI Bank and SBI are going to suffer by the higher operational cost pressure. They expect Axis Bank margin to drop 10 to 15 basis points, whereas ICICI Bank and SBI in the next 2-3 quarters they expect it to drop over 30 to 40 basis points. And that might be the reason yesterday both ICICI Bank and SBI got affected more compared to other banking stocks. Just a disclaimer, I am not recommending any, but I like to highlight what I am thinking and how I am viewing this from my perspective. First of all, in this report, they haven't talked about the net interest income or otherwise revenue. Rather than they highlighted about just margin pressure, net interest margin. So in the next 10 or 15 days, if market punishes HDFC Bank and ICICI Bank from the present price level means, I'm seeing that as a buying opportunity. The reason is pretty simple, like the difference between the hardworking and smart working. Here, what most brokerages highlighting is, Indian banks won't do the smart work it used to do, like the net interest margin won't be above 5% kind of. However, they haven't talked about the hard working at all, like how much percentage the actual revenue, net interest income or the net profit will get affected, or will it increase/decrease because of this and all, etc. I'm assuming it will be none. The reason is again simple. We know the bi-weekly deposit and credit growth macro data. In the history of Indian banks, it has never been the present good level. If required, please pause and have a look at this data. The top one is the Indian bank bi-weekly deposit growth and the bottom one is the loan growth. Now, as per this data, both deposit and loan growth is over 7-year high value, which in turn means banks doing more hard work. So possibly we will have a good net interest income growth and net profit growth with a slight compression of profit margin. At the end of the day, whether I'm having 10 crore rupees or 100 crore rupees from the investment is more important than how much margin I got. So basically, this is what all the big investment firm and brokerages will do. They will tell you half of the information and they act on other half of the information. Here, please understand, not necessarily they have to lie. They did told the truth. And for the moment, this is what I am thinking. If they push the market down means if opportunity arise, then I will probably enter before the next quarter result season starts. Again, I'm not recommending, I'm telling this so in this way we can analyze and cross check as well. And also there are a couple of people asked in the comment section, what is the use of all this macro data and how we can interpret this for stocks, etc. I hope this answers that question. Basically, having the day-to-day macro data, our mind has to integrate it and use it for our advantage. Sometimes we can be wrong and have to be ready to face that consequence as well. Anyway, back to yesterday's market. All sectoral indices ended negative, down up to 3%, with banks, auto and pharma being the worst hit. Regarding institution, FII again net sold for over 3000 crore rupees, while DAI net bought for 1160 crore rupees. Then moving to US, Before their market opening, Department of Labor released the number of people who newly for the first time filed for weekly jobless insurance claims. The data came as just around 2 lakhs new claims, and it was less than the expectation and previous week data. This, along with the Fed Chairman hawkish speech, made the 10-year bond yield to increase near 4.5%, which is another new decade high value. As a result, again last night, US market crashed. Dow Jones closed negative 1.08%, S&P 500 decreased 1.64%, while Nasdaq was crashed by 1.82%. In case of VIX, it increased over 15% and moved above 17.5. Regarding oil, Russia banned the export of refined fuel like gasoline and diesel, which in turn to some extent supported the oil. I mean, please note, banned the refined fuel, not the raw crude oil. Anyway, at the time of this video, WTI crude oil is trading around $90 per barrel, while Brent crude oil closed at around $93 per barrel. Then, in case of Indian areas, only HDFC Bank closed positive, all others closed negative, especially ICICI Bank, which dropped over 3%. Here, in case of HDFC Bank, only last night it closed positive, but if we consider the whole percentage loss in the last 1 week, it needs to correct more, at least 2.5% in the Indian market. So, it suggests there is a high possibility that banks might trade further negative in Indian market today. Similarly, GIFT Nifty today morning, it closed at 19,663, which means it's kind of indicating 130 to 150 points gap down or negative opening. Then, as per stock open interest analysis, Glen Pharma, M&M Financial, Gujarat Gas, Bank of Baroda and HCL Tech got the increase in open interest along with a fall in stock price, which means it got the stock short build-up. Similarly, MCX India, Berger Paints, Infosys, BPCL and L&T got the long position build-ups. So, as usual, be cautious while trading in those stocks. As a summary, clearly global momentum, US market, Indian ADR and GIFT Nifty, none of them is in favor. For the moment, based on GDR, only Reliance looking some neutral and Infosys got some more positive news. Other than that, as per data, there is no good news and maybe the possibility of dead cat bounce. Let's see. About the things to look out, first morning before our market opening, Bank of Japan interest rate decision. Again, the expectation is to keep it as it is. In addition, they are going to release the August month inflation as well. Then, during our market hours at 11:30 am, UK's retail sales data is due. Then around 1:30 pm, Europe's September month PMI data is scheduled to release. Finally, after the market hours around 5 pm, bi-weekly Indian banks loan and deposit growth data is due. Then for US, their PMI data is scheduled as well. Just for info, yesterday Bank of England kept their interest rate as it is. Coming to technical, Nifty opened a gap down of 60 points and throughout yesterday it was under pressure till it reached around 19,700 where it took the support and recovered a bit to end the day. Thus, on the daily chart, it formed a long bearish candlestick with a lower lows and lower high formation for the third straight session. I mean, Nifty is in the process of retracing the recent rise it has 19,223 to 20,222 and now it reached the zone 19,720 to 19,680 where the 20-day moving average and 50% Fibonacci retracement level is placed at present. So it can be a good support and it may take a breather now, but the upside seems capped due to the underperformance of heavyweight stocks. Here, the daily momentum indicator and RSI is indicating a negative crossover, which is a sell signal and is now in sync with the price action. However, technically, Nifty has completed one leg of correction, so 19,700 would be the key level to watch out for. If Nifty succeeds to trade above, then we could expect a relief rally to 19,825 to 19,875 level. On the flip side, Fresh selling is more possible if Nifty drops below 19,700 and could slip till 19,650 to 19,600. So in terms of levels, 19,650 to 19,600 is the crucial support zone, while 19,850 to 19,900 shall act as the immediate hurdle zone. Then coming to Bank Nifty, it also had a gap down opening and traded down for the rest of the session. Thus, it too formed a long bearish candlestick on the daily chart, and also it has breached the 20 and 40-day moving averages. In addition, the daily momentum indicator has a negative crossover, which is a sell signal. Thus, both price and momentum indicator suggest a further decline. On the downside, expecting it to target levels of 44,500 to 44,360, which coincides with a 20-week moving average and 78.6% Fibonacci retracement level. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I am doing this for my and viewers' educational purpose only. Thanks for watching.